Joining me now is Rick Pitcairn, Chief Global Strategist at Pitcairn. Welcome to the New York Stock Exchange.
Thank you. It's good to be here.
So stocks are remaining resilient. What do you think is driving all of this?
Well, it's just one of those burning summer rallies that happen every once in a while. The sell in May and go away thing didn't work at all this year. We came out of April, everybody was tremendously negative, and then we've had a continuance of AI-related earnings and a broad-based move in the market that has really, I think benefited more long-term strategy investors than the people who timed, because they were all coming out of the market right before the rally happened.
Where do you think the biggest growth opportunities are in the market right now?
Well, I think, we're lucky. At Pitcairn, we serve some of the largest families in the country, and they have long-term views. So I think you should take notice of the fact that these companies with the biggest balance sheets in the world, the biggest balance sheets in history, are investing billions of dollars in AI infrastructure. $350 billion. Before COVID, that was like a large government surplus, stimulus package. So I think you need to look in that area, whether it be in the energy side or on the technology side, to see if the earnings that we saw in the second quarter will continue in the future.
Can you talk more about AI? I had a guest recently who was comparing it to the internet boom, and I know a lot of people are making that comparison. Where do you see it going in like 5 to 10 years?
I think, obviously, if you have really the best and biggest balance sheets in history in Google, Amazon, Facebook, with those thinkers that are investing the kind of money into this that they're investing into it, they're telling us something, what we know about AI or not. They're telling us they think it'll be real. And I think the contrast to the internet era of a couple of decades ago is that it seems to be turning into earnings faster. If you look at the earnings season that we just came out of, all this money they're investing in AI, they tend to turn it into earnings more quickly, which I think would see more of that rather than less of it as we go into the next year.
I was actually leads into my next question. Earnings season is kind of ramping down. What are your takeaways from it?
It started a little on the slow side, but I think you really saw towards the end of it some really surprising earnings out of the tech sector. So I believe we were looking for like a 5.7% growth rate in the second quarter. I think it's going to turn out to be almost twice that. So all in all, a strong earnings season. And we still have NVIDIA out there in a week or two, and I think that could dictate some of the final tally of the earnings season. But I think in general, it was more driven by that AI tech spin turning into earnings more quickly than we thought it would.
So Fed Chair Jerome Powell, he's going to be in Jackson Hole on Friday delivering a key policy speech. What do you think investors will be listening for, and what do you think might happen there?
It's a really good question, and I know all eyes will be there Friday. We always like to step back a little bit at Pitcairn, and I mean, one of the things that I'd point out is, over the past 5-10 years, every time you'd have a market dislocation like we had in April, the Fed came to the rescue. And this time it didn't, and the market still rallied. So I believe that if they had it all to do over again, the Fed, they would put that 25 basis cut in earlier in their last meeting. I think they will in September. I doubt they'll go 50, because I don't think the data will lead to that. But I think he'll be more cautious with cuts than aggressive.
So regarding interest rate cuts, if rates are cut, how does that affect the average investor?
Well, I think that has a few things. It generally spurs the economy, which spurs the capital markets. And then savers, on the other hand, if they keep rates abnormally low, savers get hurt because the rates that they save at in fixed income go down. So at the margin, over the past few years, it's benefited equity investors over fixed.
Okay, and what advice do you have for investors in this time that we're in with the markets?
I think that we're in a very politicized environment right now. My clients, a lot of them I talk to, there's so much emotion, whether it be around the president and his policies and his personality, or some of the changes that we see going around us due to AI, or some of the changes that we see due to global conflict and war. And I think it's really important not to get over emotional as we look at these markets. Warren Buffett said when it comes to the stock market, investors need to check their emotions at the door. We really believe that. If you're looking at investing in the market in a way that we think leads to success, that means sticking with a plan over the long term and not letting the short-term emotions come into it in a way that they really, quite frankly, have this year.
Can you give us a tangible example? You mentioned that you feel like investors may be emotional and myopic. Like if somebody's like using emotion to make investment choices, what does that look like?
So in April, if you came in and you said, I know exactly how tariff policy is going to end, and it's going to be negative, and there's going to be all these dire consequences, and I want out of the market right now, you were really getting into sort of a narrative where you didn't have the facts. You didn't know where tariff policy was going to end, you didn't know what tariff policy was going to be, and you didn't know how that was going to impact the economy. So if you can step back from that short-term news cycle and keep your less emotional hat on, then you might have been less likely to make a big move out of the market at exactly the wrong time.
Are there any under the radar storylines right now that you think investors should be looking out for?
We're very interested in how energy plays out. I think this all of the above energy policy to drive energy demand going forward. It was just a few years ago where it seemed like Exxon was the most hated company in the world, and anything to do with traditional energy sources was going to be left in the past. I think it's going to be much more dynamic than that. I think there's going to be a bright future for natural gas. I think nuke will come back in a way that will take longer but be very interesting, and I think renewables are interesting. So this revolution that we're going through on technology is going to be driven by energy, and I think investors should pay attention to that.
Thank you so much for joining us, Rick Pitcairn, at the NYSE.
It's great to be here. Thank you.
Great. So coming up, a survey conducted